The Fed fallout, stocks tanking after central bankers saying the global economy has them worrying, so they're keeping rates near zero. Now, some folks fretting a recession is coming. Should they be? Hi, everyone. I'm Brenda Butner. This is Bulls and Bears. And we've got our Bulls and Bears this week. Gary B. Smith, Jonas Max Ferris, John Layfield, along with Susie Welch and Jamu Green. Welcome to everybody. Okay, Gary B., people are scared. Should they be?
I don't know about scared, Brenda, but I think worried, yes. You know, a lot of people are arguing for a Fed increase in rates. I do not think they should have raised rates. I think they did the right thing for the exact reasons that you alluded to. I think the economy is hurting right now and could definitely slip into a recession. Look, housing is flat. Wages are flat. Unemployment is flat, certainly not edging up when you talk about total unemployment. I don't really see the signs here. You know, just take gasoline prices, for example. One reason they're not creeping up is there's not a lot of demand out there. And if there's not a lot of demand, it shows that industrial production is slipping. Brenda, I don't think we're in horrible shape. I don't think this is depression kind of stuff, but this is definite slowdown environment.
So, John, some people were winners, some people were losers by this Fed non-move. Basically, if you're a saver, you can just put your money under your mattress because you're not making anything. But if you're a borrower, you know, you can refinance your mortgage. But, you know, what do you think this portends for the economy?
Well, I think it pretends that the Fed, just like Gary B. says, is not necessarily scared, but they are worried. Look, you raise rates when your economy is starting to overheat, and we certainly don't have that happening right now. The Fed missed its window about 9 to 12 months ago. Now they're talking about raising rates because they should at some point. That is the wrong time to start thinking about that. They're looking at what we have is a global slowdown right now. You have China has slowed down significantly. That affects a lot of the emerging markets that feed them commodities, your Namibias, your Indonesias, your Australia's that feed them that. There is that contagion effect there. So far, the United States has been able to stand alone, and the Fed said they were data dependent, that once the unemployment rate got below a certain level, which is at right now, they would raise rates. But what they're not saying to me is even more important, because they're obviously worried now about the U.S. economy. We're not doing bad. This is not a depression, but we're not doing great either, and that's what the Fed is saying, I think, here in not raising rates, and that is worrisome.
Well, you know, Susie, people like me and others with money in their 401k see triple-digit swings, and they get worried. But if you take a broader perspective, should they be putting their money in safe havens like gold and treasuries?
Certainly some of their money. I mean, people are scared because the signs are just really worrisome. And then what happens is fear begets more fear. And then what happens is you become inactive, and you don't increase capital formation, and you don't invest. And it really is a very negative cycle, which individuals can't break, and the government has to help break, and regulation has to come down. But definitely, given everything we're seeing, some of your money has to be put in a safe haven. You'd be unwise otherwise.
Jimmy, what's your take on this?
Well, I think that this is why pundits don't run the Fed, because, you know, the fact that the data wasn't appropriate, they didn't move. This is because Janet Yellen is not a Wall Street trader. She's patient. There is still time to make this move. There's still October, there's still December, and they are being extremely data driven. It wasn't there, so it didn't happen this time around, but the hair trigger response that we see from is this a recession, is the sky falling, is absolutely why I'd rather have Janet Yellen in this position than the folks who talk about this nonstop.
But Jonas, hair trigger, almost 9 years with rates near zero. Is it really the Fed's job to prop up the market?
Well, it is when the market's really rough and the economy's rough. There's a case where they probably went too long, and they really kind of painted themselves into a box. If they raised rates this week, the stock market probably would have tanked because we're raising rates. But if they didn't raise rates because the economy is now pushing another recession down the line, then those stock market tanks. They really had no choice at this point. The scary thing is we're kind of going into uncharted territory where we might have our next recession. Maybe it's 6 months, maybe it's a year or two away, with a near 0% interest rate environment. It kind of is scary because you're like, well, we can't really lower rates a whole lot more to get out of the next recession. So that's that psychological fear I'm a little worried about, that we can't relax knowing that the Federal Reserve can just go back to 0% rates and buy us out of the next recession. So that's the thing I would be the most scared of.
Gary B., you're worried. Many people believe the market is a leading indicator for the economy, that it gives us some hints about what the economy may bring. It's been very volatile. What's that tell us?
Well, first, Brenda, let me compliment Jamu for, in this case, not blaming George Bush, which I thought she was going to do for this. So I appreciate the restraint in that regard, Jamu. Second of all, is the market leading? I think it is in this case. Look, I think one of the reasons the market sold off on Friday was it says, oh, my gosh, maybe this economy is not good. And there's a lot of traders out there, Janet Yellen included, by the way, who are looking at this and saying, you know what? Maybe this really doesn't warrant the market going straight up. Maybe, stocks are going to tiptoe for a while, especially given companies that export to countries like China, for one, that are seeing a significant slowdown. So maybe the market is telling us that, you know what? Maybe it's not just that great out there.
But, Susie, this has been a 6.5-year bull market. I mean, stocks have to go down at some point, and people have made a lot of money in them. So it's not necessarily that you just yank all your money out.
Right, and people have lost a lot of money timing the market. I mean, if you could predict when the recession was going to be or when the cycles were going to be, you could go right to Rome and be canonized. I mean, none of us can do that. And so all we can do is know our own, as individuals, is know our own personal situation and try to invest and save in the way that's appropriate for our hopes for the future with strong caution right now, because it does eventually, as you say, Brenda, what goes up must come down. There are cycles, and this one will end.
Good words of wisdom. John, there are some positives out there. I mean, gas prices are lower, and that may be because demand is lower across the world, but that puts more money in consumers' pockets. Housing is recovering a bit. Do you see the positives out there in the economy?
Yeah, absolutely. There are a lot of positives. There are a lot of green shoots out there. Look also what's coming on with Iran is you're going to have 1 million extra barrels of oil coming on. So oil prices, every pressure is for that to go down, which is good for the consumer. Over 70% of GDP is driven by consumer. But I don't exactly share this putting the Janet Yellen on a pedestal just yet. They missed their window 9 to 12 months ago. And let's look at some history about some of these Fed guys. Alan Greenspan, along with government intervention, caused the 2008 recession. Nixonomics, with their wage price freeze and their price commodity freeze also caused a lot of problems in the 70s. Andrew Jackson shutting down the bank caused the recession in 1837. Smoot-Hawley exacerbated the depression. So for everything you have from Paul Volcker and Reagan, you've got a lot of government people, surprise, surprise, that have gotten this wrong. I'm not in the camp that Janet Yellen is all-knowing. She missed her window 9 to 12 months ago, and now she's reacting to the market.
And there are a lot of people
Andrew, you're pulling out Andrew Jackson? That's
1837. He hated the bank.
Well, no, he has a good historical perspective, and some are saying that Hamilton should never have created the Fed. But Jamu, you're the one who likes what they've been doing.
Well, when you have a job that needs to be done, send a woman.
Well, there we go.
Oh,
okay, all right. I got to send that to Jonas. Jonas, quick response.
If you look at the history of this country, when we didn't have central banking, that was a scary time. I will take the frothiness, to quote one of the candidates, over the crashiness that happens in the panics when you don't have an entity to be the central planner. I personally think this is the strongest economy right now. It's not even that is the fact in the whole world right now. And in that case, as an American investor, you don't need safe havens like gold. That's a thing you do in India because you have a screwed up government. In America, stocks and bonds do well. Gold is down 40% over the last few years, as much as the stock market fell in 2008. So that is not a safe haven for U.S.-based investors.
Okay, I want to give the last word to Susie, who is shaking her head to this.
I know I have gold in my safe. I mean, I just feel, there's value to gold. I'm not going to go head-to-head with Jonas, an economist, on this one, but I do think that there is a value to gold.
Okay, thanks, guys. Cavuto on Business in about 20 minutes from now. Hey, Neil, what do you got?
Hey, Brenda. Well, we just saw Carly Fiorina take on these guys. Now, can she get the money, guys? And while Hungary is putting up fences to keep these refugees out, are we about to take 65,000 more of them in? We'll see you soon.
You will. We can't wait. But up here first, forget going after made in China. The Donald now going after U.S. companies making products in Mexico.